WSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
And welcome. You're listening to the Financial Survival Network. It's Kerry, Lutz. We're back after a long weekend. I was in California. I'll tell you all about it later. And hey, we've got Andrew Hoffman with us. Andy is going to be switching days. It's Tuesday, January 13th. And well, we'll have to think of some catchy alliterative phrase for Tuesday, but I can't think of it right now because I am jet lagged out. I just had the worst of all possible flights. I got stuck in the famous Los Angeles traffic going to the airport. They don't know how to drive in the rain in LA. They don't know how to drive in the fog. And then Monday morning rush hour traffic, which starts at like 5:30, unlike, I don't even drive in rush hour traffic anymore, so I forgot how much fun it was. And, I didn't miss my flight, but they couldn't get my suitcase onto the plane with me, Andy, so I couldn't go on to the flight. So they had to reschedule me, which meant my connecting flight in Dallas, I couldn't make that to get to West Palm. So this was just a total cluster, you know what.
Well, at least you didn't take Spirit Air this time.
Yeah, well, it was on another legacy carrier that's currently in bankruptcy, but they did their best. They got me on there. It's just I wound up in Fort Lauderdale, where a friend was picked me up. Luckily, she was supposed to pick me up in West Palm, but agreed to drive the 40 extra miles to get me in Fort Lauderdale. But my luggage wound up in West Palm, and I drove there this morning to pick it up, and it was there waiting for me, and it all worked out. So what do I have to complain about, right?
I'm very happy.
But the state of the world, we got lots to complain about, right?
Well, when do we ever not, if you're talking about the financial world? I mean,
yeah.
Look at the price of oil. I mean, how much more can I tell you? Of course, it's not just the price of oil. It's the price of all commodities. Bloomberg Commodity Index hit a 12-year low today, or yesterday. It's fallen further today, a lot further. And, of course, the CRB index is almost at its all-time low. The dollar index is exploding. Exploding off of its 10-year trading range, not because the U.S. is doing well, because the global economy is collapsing and people are running to the most liquid of assets, which is probably why the best performing asset is now gold and silver, if anyone's watching, which are exploding higher in all currencies. And I can't emphasize this enough. When I wrote the article at the end of last year called End of the Gold Bear Market, it wasn't a bear market in most currencies last year. On average, they went up 5 or 10%. And this year alone, I mean, just in the first 2 weeks of the year, we're talking about explosive moves. Probably the all-time low, or I should say all-time, the multi-decade low for Swiss franc price gold will be the day before that Swiss referendum a month ago. It's since gone up 15%. Euro gold exploded above 1,000. It was being held at 1,000 euros per ounce for 2 years, and now it's like 1,050, 1,050. Yen price gold almost at an all-time high, just a few percent away. Rupee price gold, even euro gold, all these things, 20 to 25% away from all-time highs. And then, of course, is Russian gold, Venezuelan gold, Argentinian gold, Turkish gold, Indonesian gold, all of these things. We are talking about, this is the end game here. This is what I call the single most precious metal bullish fundamental imaginable, which is the collapse of currencies as everyone flees into the most liquid assets at the end game when the economy is collapsing.
Yeah. And how many years have we been warning you about this, Andy? How many years have you and I been talking? It's
forever.
Been
and again,
years.
For people who want to think that like people like me are just saying, oh, the dollar is going to collapse, I have forever said that it would not. I said that it's more likely the dollar index goes to 150 than it goes to 50. There's no conceivable way that the dollar can fall materially against the euro. There's no way. There's no event that traumatic. that the euro could survive, let alone the yen. I mean, one of my predictions for this year is the yen will start to hyperinflate. And as for last year, I'm talking about not this year, last year, 2014 in the beginning, I said the dollar is going to explode higher against other currencies because everything is going to collapse like in 2008. But even I didn't think it would explode above the 2008 highs like they weren't even there. I mean, this is the worst imaginable situation where you have this massive deformation of supply and demand, where just about every business in the world is oversupplied, where at the same time you have currencies collapsing left and right, which is causing inflationary pressures at the same time that they have deflationary pressures of these commodities. I mean, it is a terrifying situation, which is why, remember, I wrote on October 7th, that's still 3.5 months ago, I wrote 2008 is back with one temporary exception. And I was referring to the government-supported stock markets that, try to keep a semblance of reality. That was before oil fell by 50%. That was before all the things that we're seeing right now, with currencies crashing, with the Russian crisis, with Greece maybe exiting the euro in as little as a month. It was that bad 4 months ago. Now, there is no doubt this is the worst snapshot in time of generations, probably since the Great Depression, except back then, no one had any debt. Now we have more debt than all the debt combined throughout history.
Well, pretty soon, Andy, no one will have any debt again.
That's right. I mean, either by hyperinflation or default. It's only a matter of when. And when we look at this guy, Serpis of Greece, who's going to be, he's the Syriza guy. I mean, he says flat out, I want to write off all of the Greek debt. You defrauded us in taking it, and I want to get rid of all of it. I mean, how much more obvious can they make it that they are going to default on their debt?
Is he wrong, though? Is he wrong?
No, it's not a matter of wrong or right. I'm saying we're talking about what the impact will be on the global financial system, which makes it so comical that that PPT still, it shows you just how few people are actually left in the stock market, that they can make the Dow go up 200 points when the worst possible perfect storm of horrible news and market movements is occurring around them. I mean, no one is paying attention to stocks anymore. They are more immaterial than ever in history.
Yep. And, well, there are some people paying attention to it, but it's becoming less relevant by the day. Let's face it. I mean, it's the chasm of destruction between reality, between economic reality and markets. I mean, it doesn't change. It doesn't create a wealth effect. It doesn't improve the economy. It doesn't reduce debt. It doesn't improve government approval ratings. Nothing about the stock market being higher works anymore. It did for a time back after the 2008 crisis. There was still some dry powder of credibility and money printing dry powder. So some people believed it, and it had some kind of temporary impact. Now there's absolutely, utterly nothing, and which is why record high Dow Jones propaganda average, record low commodity prices, all at the same time. Hey, and it's somebody said gold was going down to $750 the ounce. Another person said $250, and I just pay them no mind, because the reason we buy gold and silver has nothing to do with the price of gold in fiat currencies, right?
Well, of course. I mean, gold and silver. I wrote an article months ago called "Commodity Crash," but don't worry, gold and silver are not commodities. The point is that they're money. And in fact, to that, what you're saying here, here's the first paragraph. I'm going to read you the first paragraph of what I wrote this morning. It's not even published yet. It says, those deflationists, whether wave theorists, cycle theorists, or my favorite of all, proprietary technical analysts, they continually claim that any price that's falling must continue to fall forever. That includes gold and silver as well, although unerringly, such experts claim to be short-term bearish, but long-term bullish. I've been observing this fear-mongering phenomenon over a 26-year career as a CFA chartered bond trader, stock analyst, investor relations officer, and blog commentator, but nowhere more so than in precious metals do the relentless covert actions of a manipulative cartel intent on maintaining the status quo of history's largest fiat Ponzi scheme. And again, I mean, I can't emphasize enough how much damage these newsletter writers have done over the years in claiming that gold is going to go down because of deflation. Gold has been the best performing asset during the Great Depression. It was the best performing asset in the 2008-2009 crisis, and it's the best performing asset last year. in a worldwide basis, and it's been the best performing asset this year. And that's with all of the smashing.
The only thing it wasn't the best performing asset in last year was when it was priced in dollars, right?
And even that, it was unchanged. I'll take unchanged.
1.9% it was down.
Yeah,
Silver,
in fact,
another story.
Gold was up in U.S. dollars with 1 day left in the year. And that last day, of course, they came in and smashed it so that people couldn't say gold was up for the year. But on average, on the average currency, gold is soaring. I mean, gold has doubled in rubles. Gold was up, I think, 15% in euros last year. And that's before this year, when it's probably up another 15% just in the last 2 weeks.
Mm-hmm. Yep.
How about in yen?
Correct.
I mean, yen price gold is only 5% from its all-time high right now. 5%.
Yeah.
Rupee price gold, 20% from its all-time high. Euro, Swiss franc, 25%. That's not too far. Again, this is very price inelastic. The higher the price goes, the more people want it. And so when you see gold breaking out in all these currencies and so many others where it's so close to breaking out, the upside pressure is going to be incredible. And we haven't even gotten to the supply situation. We were just talking about it before this call.
Right. So what's the supply? I mean, the silver shipments out of the mint there for the first 13 days of the month, huh? Pretty impressive, huh?
Well, look, when you talk about supply, they had the U.S. Mint numbers just came out first 12 days of the year, 3 million ounces, same old. We're on pace to break last year's record level, which broke the past year's record level, et cetera. But when we talk about supply, because of the strangulation of capital, not just like the last 2 years, we're talking about the last 15 years. Heck, when I left the mining industry in mid-2011, it was already dead and buried. They had no capital. And since then, it's been 1,000 times worse. Almost the entire exploration sector is gone. There's almost no exploration left, which is why one of my big predictions this year is the complete and utter paralysis of an industry that was already dead and buried. They're going to all start merging, and they're going to cut costs even more, and they're going to put all these production projects on the shelf, et cetera. So, there's no doubt in my mind that gold production has already peaked. And it's hard for me to tell how fast it'll fall. But, demand hit a record level in 13 and hit it again last year. And it's going to be much higher this year. And there's no way supply is going to keep up. But silver is the real wild card because things are so bad right now, even with it moving above 17 now. The average primary miner needs well into the 20s just to record a profit and probably closer to $30 to be able to sustain its reserves and actually have it be an ongoing concern as opposed to just, producing its depleting assets. And again, worse than that, 2/3 of all the silver in the world is byproduct of base metal mines, mostly of lead and zinc mines. Lead and zinc prices are plummeting now. And I expect, because of what I've been saying all along about commodity prices, that they have nowhere to go but down. So you're not only going to see a plunge in supply from primary miners, but from as secondary as well. And on our webinar panel that we did about 2 or 3 months back, David Morgan, Steve St. Angelo, Bill Holter, Harvey Organ, and myself, we said it's not inconceivable that production falls 25 to 50% in the next 3 to 4 years on a worldwide basis. And at a time where not only is investment demand going off the charts, but industrial demand is expected to be at worst flat because of all the new applications. There's just no inventories out there. There's no new supply coming. I mean, how much more can we scream that there's going to be a major shortage? Look, we already had one in 2008, 2011, 2013, 2014. You think we're not going to have another one now? And then when we do, it's not going to be enormous?
It's going to be the mother of all shortages. I mean, we just saw silver today break 17 on, ostensibly not a lot of news. We see an upside reversal for gold. It was down in access market trading in the evening. I'm not going to bet that they're not going to try to slam both metals again. I mean, it would only be par for the course, right?
Well, they're doing their thing. I mean, they've capped. Look, you don't have to be a moron to see that for the past 24 hours they've stopped gold at exactly 1240 5 times. I mean, it's just like they were doing it at 1230 and it broke that, and they were doing it at 1200 before that, et cetera. I mean, it's the same old stuff. I mean, but as you said, look, silver's up 55 cents today, despite all their efforts. The fact is they kept it too low for too long, and the shortages are going to be creeping up. up. And at some point, they're just going to, be like crazy, like 2008 or 2011. It's just amazing how the gold-silver ratio could have gone up at all last year, when not only did you have record silver demand, but it was far greater on a relative basis than gold. So something is going to give. There's a reason I call silver the Achilles heel of the financial world. They desperately have to keep the price down. They're not going to be able to do it. Why anyone would not be buying way below the cost of production with the world falling apart as it is, I just don't understand.
And let's also look at the fact that the metals, that gold is hitting records in all the other currencies. We're seeing the euro tank. When the euro breaks 115 and gold stays where it is, just hypothetically in U.S. dollars, it's putting tremendous pressure on the U.S. dollar price of gold. Tremendous pressure.
Again, I've said all along about the dollar rising is bad. It's bad for the United States. It's horrible for corporate earnings. Mm-hmm. There's nothing good about it surging any currency, let alone the dollar. And again, the funny thing has been all these people say, well, the dollar's surging, that's bad for gold. First of all, there's been no historical proof of that. From 2005 to 14, the dollar index didn't even move. It was in the same tight trading range for years, and gold went from 300 to 2,000. So it really doesn't matter. But the fact is, when people say, well, the dollar is up, so that's bad for gold. So they're implying that there are 300 million people in the world using dollars, but there's 6.5 billion people, 300 million to 6.5 billion people that are using currencies that are falling. They're buying gold if the dollar goes up. And right now, the dollar is going up at a record pace. So you're talking about massive, increases in the price of gold across the world, as we were just talking about. All that does is foster more demand. Think about it. If you're in Europe right now, they're doing QE. Greece might leave. You think Europeans aren't going berserk buying gold right now? Japanese, they're not going berserk. Russians, all these other places that don't get press: Argentina, Venezuela, Turkey, Indonesia, South Africa. South Africa is one of the largest producers of gold. Record low for the rand as we speak.
Hey, you want to have fun? Look at Kitco, at the exchange rates, and you'll see that the price of gold went up 4.5% today in Russia. It's up 0.84% in the Euro land, and yet on a dollar basis, it's up 0.29%. That tells you everything you need to know. It tells you that buying pressure is driving prices way more outside the U.S. than in the U.S.
And this is what I mean by today's article that I said, that, the death of manipulation. They have been able to keep the stock market higher. They have been able to keep paper price gold down, although it's been rising sharply. But again, they can't control everything. They've completely lost control of treasury bond markets around the world, of commodity markets, currency markets, you name it. And now they've lost control of gold markets and other currencies. The last things that are going to go, the last things are going to be the dollar price of gold and silver and the Dow Jones average. And frankly, the Dow Jones may just hyperinflate. But, the last things that they're going to lose control of will be those two things.
A 10-year bond yield, Andy, 1.92%.
Yeah.
That's shocking.
Well, remember back in October, in one day, it went from, 220 down to 190 to 189. It was a flash crash.
Yeah.
Which I've been writing about. How can you not be terrified seeing something like that, showing how little the markets are controlled right now? But I wrote back then, I said, I guarantee you, every time one of these things happen, the gap comes back to be filled. And this morning, it was broken. The 189 was broken. It was 188 at one point. Of course, it'll be back at 188 momentarily. It's going, the yields are falling as we speak. It'll be down to nothing. Right now, the Japanese 10-year yield, I think, is 0.25. The German yield is 0.45. Every one of these, except for like the Greases, which are going to be the first to default, are going to zero. Everyone who has a major central bank behind them, from England to Japan, Switzerland, every one of those is going to go to zero or lower until the hyperinflation comes in. It's that simple. It's called front running. I've been talking about it forever, and it's what's going to happen. They've completely lost control of that market. We were talking about, you and I, back in July, how many months ago was that? About the new Hail Mary trade, which was the Fed trying to push rates up despite doing QE to make it seem like the economy was better. I wrote 2.6%, enough said. That was their line in the sand. They lost that. Then I said 2.2% is the new 2.6%. Now here we are, 1.9%. Then it'll be 1.5. Then it'll be 1. Then it'll be 0.5%. I'm telling you, this is what the deflation does. It destroys everything that the government's trying to do. And right now, all they got left is the Dow Jones propaganda average and that U.S. dollar priced paper gold price. And both of them, they will lose those wars on, I assure you.
Hey, and what about our shipping index? How's that looking?
Well, I hadn't even looked the last 2 days. I know that it hit the all-time lowest level in January the other day, and it's only a few percentage points above the all-time low from the absolute bottom of 2008. And of course, it'll go through that any day now. Now that the oil shipping has gone to nothing, there's not a sign anywhere of anything positive at all.
Hey, can you imagine if one day you go into the gas station and you're buying gas for under $1 a gallon? My son told me Austin, Texas, not the cheapest market, mind you, in Texas, $1.89 he was paying, and that was a week ago. It's gotten cheaper still.
I paid $1.78 at Costco a week ago before oil fell another $5 a barrel here in Colorado. I mean, we're going to see $1.50 in parts of this nation now. I expect the next week or two, some places will see $1.50. And the way things are going, this gargantuan supply-demand imbalance, which will not be corrected by OPEC, I assure you. They need the revenue just as much as anyone, and they're not going to give up their market share to get it. There's a good chance that we see $1 per gallon, maybe New Orleans or Texas where you have big oil hubs. Absolutely. But again, Oklahoma, but it's not going to be consolation. It's like in 2008. It's not going to be a tax cut. It just means the world is collapsing. That's all.
And it's a derivative disaster for the banks because who writes the hedges for the oil companies?
Yeah, as Bill Holto was saying, I mean, someone, meaning many, has already lost enormously. The difference is, back in 2008, people paid attention to this and said, well, who hasn't? Now they do it all off balance sheet. There's no regulation. No one seems to care or write about it. But of course, these banks have lost. I mean, I saw it today, Standard Chartered, big British bank. They've admitted that they have billions of losses from oil. I don't know how much, I didn't read the whole article. But sooner or later, everyone's going to say, well, of course, JP Morgan has lost tens of billions on this, and so has Goldman Sachs, and so have all the hedgers and all these industrial companies and, oil companies that made stupid derivative bets on their own product, et cetera. I mean, it's everywhere. How can it not be?
Oh, it has to be. And somebody's holding the bag. Now, granted, there are natural hedges, at least in oil, so some of the users have taken the hit. But the banks have had to have taken the hit for tens, if not hundreds of billions, because some of these oil companies, friends of mine, are hedged out for a year at $100 a barrel, Andy. That's a $55 loss now. Who's taking the hit?
Of course, it's the same story. It's not just end users. It's banks. It's traders. It's sovereign governments. Yeah. I mean, they all do it, and everything that they do these days is heavily leveraged. Mm-hmm. It's not like the old days where they hedge 1-to-1. They hedge 10-to-1. They have derivatives. They are 50-to-1 book to debt ratio. All those things, and of course, it's much worse. We know for a fact that there's more derivatives out there now than in 2008. We also know that Dodd-Frank never really happened, so they were unregulated. We know that they just stuffed it in the Citibank wrote legislation. It got stuffed into FDIC. So we're all going to be, there's no coincidence that it happened now. Of course, we're all going to pay for this when we find out, who's lost money. And the worst part is that it isn't even started. I really believe that oil can easily go much, much lower than this because of the such enormous difference between the capacity of oil and all other commodities right now and the demand, which is only going to get worse, the demand.
Yeah, we know this. There's not even a question about it. And hey, we're going to the taxpayer will be left holding the bag, and gold and silver another way that you can avoid it, right?
It's really the only way. I mean, I was even writing today about this death by deflation. There's so much overcapacity that you're even seeing a lot of food prices going down. Like I see the rice price is just getting crushed. Now, I don't watch every food price. I see soybeans are down. I see rice is down. I'm sure coffee is not because you still have the drought. So, you have a lot of, there are some specific situations, like if you don't have the beef herds weren't fed well, then you have less beef. But for the most part, commodity prices, food prices are going down right now. And I was writing that from a purchasing power, to protect yourself. Everyone always says, well, you need to own gold and you need to own farmland. Farmland may become worthless, except in certain situations, because it just costs too much to produce this stuff compared to what it's worth.
Yep, that is true. And a lot of things sound great, theoretically before you really start analyzing it, right? But then you really get into it and oops, it's like, it's not so good.
Well, I mean, it's like looking at the jobs reports. I mean, look, how much more can we talk about jobs reports? They're just pure, flat out lies. But just all you have to do is look at the one the other day. They say it's 251,000 jobs, but on their same table, they say the non-seasonally adjusted number was minus 65,000. Yeah. So how can you turn a job loss into a job gain and then claim that the job market is strong? I mean, what part of this I'm missing? I don't even have to go into the insanity of even the logic of trying to claim that there's all these jobs being created, or the fact that the ones that they do theoretically create aren't even good jobs. But the fact is, look, anything that you look at with the government is a lie. And especially with jobs reports, I said the day before, I said, look at the report. I don't care if it's better than expected, worse than expected. The second you actually read the report, you'll realize that it's
fraud,
erroneous, or
fraud,
flat out not good. I mean, it's across the board. Well, GDP, 5% GDP growth. I mean, the best one is the Chinese. I think it's the 20th. When is that, on Tuesday? They can report their fourth quarter GDP, and they're saying, well, it may fall from 7.5% growth to 7.3% growth, and that's going to be taken as a big negative. And you think, I mean, are these people serious? First of all, does anyone really believe China's growing at 7%, let alone that it would matter whether it was 7.3 or 7.4? I mean, they report the PMI numbers have been below 50 for the longest time, meaning saying we're in a recession, and yet they say 7.5% growth. We know for a fact that their housing numbers are collapsing. We know that their iron ore numbers are collapsing, that their debts are exploding, there's bankruptcies, a capacity utilization, and we're told that they're growing at 7.5%. I mean, how stupid do they think we are?
Exactly. Anyway, we got to go, Andy. So next week I think we're on for Wednesday.
Yes, that will be my new day.
So what's up Wednesday, or what's it going to be Wednesday? Anyway, find Andy's work along with Bill Holter's over at milesfranklin.com. Make sure you subscribe to their daily missive. As you see, everything Andy said is coming true almost to a T, and we brought it to you. Go over to financialsurvivalnetwork.com. Check out our site. Check out all of the day's latest news, the real news, not the stuff that the mainstream media digs up to distract you, to keep you from the truth, because it's so important that you know what's going on. Gold and silver, that's your salvation. You need to be up on it. And Andy, hey, we're going to do a webinar with you shortly. I think you need to hear what Andy has to say. Really, really, really important. Andy, thanks so much. We'll be talking with you again next week on
Witching Wednesdays, or what are they trying to screw you with next, or something like that.
Yes. All right. We'll talk to you soon, man. Be well.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.